Welcome to another episode of Business by the Numbers. I'm your host, Hunt Emirates, CPA with Parmelis and Associates. So I promised last week that I wanted to do an episode about some of the executive orders that Trump at that point was going to be signing into the office, and at this point has signed into office. So we're not going to get political here, right? We're not going to talk about renaming the Gulf of America or drilling for oil or any of that stuff. But there's plenty to talk about with the IRS updates, taxes, and a couple other things. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you want to hear your question answered on here, just have a question for me or have an idea for a future episode, shoot me an email at podcast@parmelis.com. And lastly, we cannot forget our dedicated sponsors, Napa Tracks and Promotive, for being such loyal supporters of the show. Remember, if you need a new shop management system or need to hire that next team member, give them a call and let them know that we sent you. So to pick up where we left off last week, one of the only things that we had kind of heard about some of the changes as far as it relates to our world, right? Tax and accounting. I'm not getting into the other political stuff. I'm not getting into other branches of the government. We're going to stick to the IRS, maybe the Treasury a little bit on here. But if you remember, the way that we started the episode last week was talking about the incoming Treasury Commissioner, or what would have been the incoming Treasury Commissioner. Before Trump took office, he actually came out and said that he was going to retire, resign from the position, and there was a little bit of a news story about it. Like we talked about last week, it's happened before. It is historical. It does not happen very often, but this has also happened back in 1993 before Bill Clinton came into office. Now, why this happened and the timing all of it was a little bit suspicious, right? You know, it's coming off of the heels of talking about the External Revenue Service. Trump has been very, very vocal, and we'll hear a little bit later about his thoughts about the IRS and thoughts specifically about this commissioner. So why he left is what I wanted to kind of talk on a little bit. And again, I don't know why this guy left. There's a large aspect, which you'll see in a press release that we'll talk about later, where I think Trump would have fired this guy. There are a couple things going on, or what he felt going on, as far as policy or IRS tax policy, that he felt, if unchanged, would actually negatively affect his term in the presidency. This is namely stuff that was enacted during Joe Biden's campaign or Joe Biden's presidency on there, delayed, and some of this stuff was set to kind of take action during Trump's. Now, again, there's a lot of stuff that is carrying over. 99% of the policy of the IRS tax policy is all carrying over as of right now. Now, there's a good bit of that stuff that we know is kind of on the chopping block, and some of it already has been chopped. But I really think that the IRS commissioner did not want to stick around and see what was going to go on. Now, just like anything, right? You can work for someone and you can work for a boss that probably doesn't like you very much and maybe is pretty mean to you if they pay you enough money or give your team enough money. So just like anything in the world today, when it comes down to why things happen, if you follow the money, you probably find the truth. And sure enough, shortly after I did this episode for last week's podcast, I found an article that I thought was very relevant. Now, I wish I would have found this article before I did the podcast last week, or else we probably could have talked even more about why the commissioner left. But tell me if you think that this has anything to do with it. I am paraphrasing on this, and I'll put the link in here. If you want to read this article, you can. Not a whole lot going on here. It's a little bit skewed opinion by Christy Bleeber that wrote this one, but the facts on it are fine. The opinion, hey, take it or leave it. What happened on here is in 2022, the lovely bill called the Inflation Reduction Act, which I think we all find the hilariousness in this, and you will hear about that specific act more in this episode. But one of the big things, and I did a podcast about this in 2022, is it had $80 billion of funding over the next 10 years for the IRS. So pretty quickly, people went up into arms about this because, it would hire 87,000 IRS agents to allow them to enforce, things that they weren't able to enforce in the past. It would allow them to audit a lot more individuals, a lot more corporations. None of the stuff that we wanted to hear, right? The IRS is a tricky thing, and I get it. No one likes the IRS. Believe me, I don't generally or usually like them much either as far as dealing with them. I'm sure most of the people that work at the IRS are fine individuals, but they're a thorn in our side. Also, if you're in my profession, you are constantly playing a cat and mouse game with the IRS, right? It is my client's expectation, it's my responsibility as my client's accountants to try and stay one step ahead, right? Try and take deductions that we can, try and make sure that we are on the legal side of the gray area, but making sure that we're pushing the limit and making people not pay taxes. So you can see from my point of view, it's always going to be an adversarial position. And like you, to a certain extent, I don't want the IRS to get more funding. Before we get into why this funding and probably answer some of the questions about why some of the stuff is going on right now, is it's a little bit too simple. The IRS is underfunded right now. I'll tell you that firsthand. I see that in the customer service. I see that in the speed of processing. We got to be kind of mindful here. Again, it doesn't matter, but you got to be mindful that funding the IRS, there's an aspect of that is just compliance and administration. Part of the reason of why we've had so many tax notices over the last 3 to 4 years is there's not enough people at the IRS to actually process this stuff and handle it. I forget the statistics on it, but they are down 20-30% of their workforce. A lot of people retired over COVID. They had their pension on it. And then again, just like this, they're writing on the wall of what does this job look like in the future? So the $80 billion that was committed to the IRS has more or less been chomped away since 2022. The IRS has not got a single dollar in additional funding from the Inflation Reduction Act. If you remember, since 2022, they've been arguing about the budgets, and IRS is always the one that has got chopped. They got a little bit of money at first on this, but ever since then, their overall budget is actually decreased. Why are we talking about this now? This has happened since 2022. Why would he retire right now? Why would the commissioner resign? This is kind of funny. And like I said, I'm going to share the article because you look at this and you're like, how does this happen? So I'm going to read this directly from you. So the Inflation Reduction Act of 2022 included $80 billion in funding. $1.4 billion was rescinded to raise the debt ceiling. These cuts reduced the overall budget of the Enforcement Division by $20 billion. So I think that what they're trying to say here, like I said, it's not the best written article. I haven't heard these numbers here before, but essentially the $80 billion in funding is changing from the $100 billion in funding they had previously. So they made a large, spectacle about saying how much that they were getting additional funding. And just like in a lot of governmental fund accounting, it's a bit of a shell game, right? Because they say, yeah, we gave them $80 additional billion, but we took away the $100 billion that we had originally given them. All in all, the IRS is crying to blue saying we have not gotten any money, and actually we've gotten less money. Is this going to happen right now? Some of it, yeah, but most of this is over a decade. Now, where this gets worse, and where I think that probably made the decision for the commissioner to say, yeah, when Biden leaves, I'm going to leave, or, if he leaves, I'm going to leave, is in September, there was an error in a funding bill, and they removed, I'm going to read this quote out for you. Legislative language was duplicated in error in a September funding bill, which resulted in the agency losing another $20 billion. They deliberately took away the funding from the IRS, right? Shell game of, hey, we gave you some funding, but you really are still getting a decrease. Hey, that's well and good. Now, in September, when they accidentally took away another $20 billion in funding, that's probably going to start to create some ripples in there, cause some animosity. Now, I know why that they never got that funding back. They barely got this stuff passed for a budget. There is no way that they had an extra $20 billion on where they could agree to say, hey, take it out of this and give it back to the IRS. So all in all, what does this mean? According to the IRS, right, according to the spokesperson from the IRS, if they don't get the $20 billion, they're claiming that they could run out of money in 2025. I know some of you guys just pause this to cheer and say, oh my God, this is so good for me, which for a large aspect of you, it probably is. If you don't have to deal with the IRS, if you don't have to wait for a refund, if you don't have to wait for a letter back from them, hearing this news that the IRS is getting cut this year is great news for you. If you are afraid of getting audited, this is great news for you. If you have an ongoing employee retention tax credit claim, this is terrible news for you. That program is slow and it's only going to get slower. If you have an ongoing audit with the IRS, that's going to get slower. If you have to contact the IRS, whether it's me or you, that's going to be slower. Whether or not they run out of money, and they're not going to run out of money, right? Even the U.S. government can't run out of money, right? They shut down for a day and then they're right back to it. They're not going to run out of money, but I know that they're going to be crying the blues. The agency, the IRS, has been crying the blues for the last year and a half. They claim that they haven't got the funding already, and to have this much taken off of them, not only are they losing, obviously, the top commissioner, you have to think that other people are going to see the writing on the wall. It gets worse, right? Because this money is already out, right? This money has already been cut. Donald Trump, Elon Musk, the Department of Governmental Efficiency doesn't need to do any more to take this money out. It's already gone. But what they've come out and said is, hey, this is not the end of it. The IRS and the Treasury Department, right, is just like every other division in the government. And they've been told that there is going to be cuts in the future as well. Hey, not only are we probably not going to give you the funding that you guys thought you had, we're probably also going to be cutting some workforce as well, too. If you're worried about getting audited, statistically speaking, outside of COVID, when they physically couldn't come out here, the near future is probably pretty bright for you. Less funding, less people, less, ability for them to come out and audit them. They have some numbers on here that they're going to have 6,000 fewer wealthy individuals being audited, 2,000 fewer large corporations. I think that those are really small numbers. I'm not sure how many millions of dollars it costs to audit a wealthy individual, but I feel like if you lost $20 or $40 billion in funding, you should be doing less than $6,000 worth of, or 6,000 audits less. I've heard cases of 80,000 or even above of what it's going to reduce. There's been some people talking about that if the IRS actually has to do this and actually has to kind of cut down on things, that they will actually cut down on some of the audits and go over to the compliance side and more the workflow of processing returns and getting it out. Now, there's a bunch of weird tax code in there that he's trying to enact on there. And when I say weird, it's nothing shady. It's nothing malicious. There's already stuff in legislation that has been around for years, right? Some of it goes back to the 30s, 40s that we never really used in the past, but the IRS has the ability. Now, as we'll talk in a little bit, some of this has to do with the setup of the External Revenue Service, which again, the whole idea here is what does the Internal Revenue Service look like in a year, 2 years? Is the major revenue and tax policy of the U.S. still internal and taxing our internal citizens? Or are we going to be moved to more of a consumption tax, an import tariff situation, or something else in between? I think that the only thing that we can know on this is obviously the commissioner leaving is big news in itself, and probably is just even more telling of, hey, we have even more changes coming up. Now, I promised you that I was going to give you the statement because I feel like that this statement, and I'm not going to read you the entire thing on here, is probably a lot more telling about Donald Trump's personal views on the IRS. So one of his executive orders, and none of the stuff we've been talking about has even got into the executive orders, and to kind of be a little bit short on that, we didn't get some of the executive orders that we thought or were promised, or at least not yet. But we'll talk about those in a little bit. So one of the actual executive orders that we are going to talk about is a cease and desist letter that was sent to the IRS on, December 22nd or so? So all of this dates back specifically to the 1099-K. Do you remember when people said, hey, if you accept Zelle, PayPal, Venmo, that you're going to get a 1099 at the end of the year? Well, whether you knew it or not, they actually changed that last year. They made the threshold $5,000. So if you got less than $5,000, you weren't going to get a 1099. Unofficially or officially, however you want to look at this, supposedly this was going to go back down. And in 2024, everyone who had Zelle or Venmo was then going to get a 1099, because essentially what they did in 2023 is they just kicked it forward. So if that was to happen, the press release says that this would have mean that 600,000 more families making less than $75,000 would have been hit by an IRS audit. The idea behind this is if you guys send out these 1099s, the average person is not going to report it. You are going to have an instant audit for hundreds of thousands of people for no reason. Most of these people don't owe any tax on this. It's going to be a massive waste of the limited resources the IRS has, and obviously put the American people in a disadvantage and in a position they just shouldn't be in. So I'm going to read, and you can read down through all of this one. It says, this was unpopular. This has been providing political cover for Democrats. There's some pretty big accusations kind of being spread against the commissioner. I don't want to get into political stuff. If you want to research this dates back to the whistleblower case where you had an IRS agent leaking sensitive information, and generally the information that the IRS agent was leaking was for Republicans or conservative figures. So there is a personal vendetta on here. And if you don't think there is, here is the last line. Congress fought to rescind new funding intended for new auditors at the IRS as part of the Fiscal Responsibility Act. The American people overwhelmingly supported this move and gave President Trump a mandate to end the weaponization of federal government and cut the bureaucracy. Now he's taken action. Is that saying a whole lot of anything? No, but I think it kind of sets the tone, right? Hey, we are looking at the IRS. We are bound to make changes on it. And to a large extent, we're going to have to see what comes out. So before we kind of wrap it up and talk about some of the executive orders that we're keeping our eye out or we haven't seen yet, let's go down through some of the other stuff that we did see. So I'm going to skip onshore wind. I'm going to skip offshore winds. And I'm going to go into something called a freeze of disbursements. So we talked about the funding clamps that are put on the IRS. And really there is clamps put on generally just about every single federal agency right now. So there was an executive order put out there called Unleashing American Energy. And essentially what it does is directs federal agencies to pause any disbursements and funds appropriated under the Inflation Reduction Act. So we just talked about it before that anything having to do with the Inflation Reduction Act in the IRS has been stopped. Essentially, that was just a smaller piece in a more larger sweeping bill to stop any sort of spending that was committed under the Inflation Reduction Act. I know that that probably has to do with international policy. I'm sure it has to do with different renewables. There was stuff in there about rescinding stuff on the Green New Deal. Other stuff was like loan guarantees, some grants. I don't think that there is a ton of stuff that kind of relates to your day-to-day on this. The biggest thing is the tax credit side. Obviously renewable green energy has been hot and credits have been pretty good for the last couple of years. As of right now, solar, renewable, wind, all that stuff is still alive. With all the stuff that's going on right now, you obviously have to look at this stuff and say, hey, is it alive? Will it be around this year? Probably. Would we expect it to be around for much longer? The way things are looking, I just don't see it. Now, again, tax credits officially right now, no tax credits have been changed by executive order. Could that change in the future? Maybe. One of the cool ones on here that I wanted to mention before we go to the other notables that we didn't see or ones that we're looking out for is, like I mentioned before, there is stuff in the IRS tax code that we have not used, or in a case like this, have not used for almost 100 years. Most of Trump's policy seems to look towards making sure that there's fair tax agreements between countries on an international level. There's a couple of stuff about there around, minimum corporate tax standards. It all has to do with international trade. Honestly, it was a little bit even above my pay grade on there. But the whole idea is that instead of looking for the United States citizens as their revenue base, it's going to be looking to an outside, right? Tariffs, imports. Some of this also has to do with specific countries. If you have double taxation, or if you subject American citizens to what they call discriminatory or extraterritorial taxes, the IRS already has existing tax code in there that they can double the federal income tax and federal withholding of citizens of that nation. Let's just think of something that is very bipartisan, right? Let's just say, Costa Rica, right? So Costa Rica, a ton of expats living in Costa Rica, and they actually have very favorable taxes for Americans. So let's assume that Costa Rica went out and said, you know what? We don't like what they're doing in the United States. We don't like what they're doing on some of these tariffs of our bananas or whatever they're, exporting, coffee, cocoa beans, right? And so in return, all of the expats that were in Costa Rica, we used to kind of give them a pass. Now we're going to charge them a 30% tax just because. What this would allow the government to do is say, hey, we've had this authority since 1934, and I imagine that they haven't done this since World War II, is if we have a country taxing our citizens at an unreasonable or discriminatory level, we have the ability to automatically double their taxes. So that would mean that any Costa Rican person or someone that holds a Costa Rican citizenship paying U.S. taxes would go from paying 20% taxes to 40%. The overall idea behind this, and you guys have seen this, is it has to do with setting up, bargaining chips for international trade, right? Let's say that Costa Rica starts to, put some sort of tax on American citizens. We could yell and scream and we could kind of control stuff through tariffs on it, but that's generally kind of our only sort of option. I don't think that it's going to happen to Costa Rica, but is this something that they could do on Chinese nationals, Russian nationals? Absolutely, right? Do you think that your citizens are going to be yelling and screaming at your own government if they're in some sort of tariff battle between China and the United States? No, I don't think so. But imagine if, the high income earning Chinese citizens in America, where they're dual citizens between Chinese and United States, now all had to pay double withholding, double income tax. Do you think that there would be pretty strong pressure from their own citizens back to their government of, hey, you need to figure this out because we cannot be paying this much in tax? Absolutely. Just like I'm really interested to see if this stuff will happen, a ton of this stuff is posturing, a ton of this stuff is optics, a ton of this stuff is just political mumbo jumbo. Really, the next 3 months to 6 months is going to be telling on how much of this is actually utilized and what it looks like. Before we wrap it up, what other stuff do we have coming, right? And these are ones where I'm going to put it out there of, if these come out, they're big enough, I'll probably do an episode on them. Do I think that they're going to happen? Maybe, maybe not. So the first one, tips. Remember on the campaign trail, Donald Trump came out and said that he is not going to tax tips. Like we talked about in that episode, I like the idea of it. In practice, what he probably found out, or if he even looked into this stuff, is that logistically it's really hard, right? If you don't tax tips, no one's going to pay their employees. Everyone's going to start, quote unquote, tipping them. You can still do this stuff, but it's more to it, right? Executive order, if done correctly, goes into action that day. Generally, they're a little bit more straightforward, like what we've been seeing. Hey, start this, stop this. To actually change the tax code and not include tip income, that's a little bit more complicated. Could that come? Maybe. Should we expect it to come? Probably not. If it does, is it going to affect your business and day-to-day life that much? Probably not. But if they legalize, tipping and they make it tax-free, next episode, if they do it, it's probably going to be like, here's how it is, and here's how we're going to set up a pay plan to tip all of our employees. But we'll have to see on that. Now, one thing that probably would directly affect all of you guys, or most of you guys, is overtime, right? Just like tips income, he didn't want that to be taxed. There was promises that overtime wages would also not be taxed. Again, no word on this, no word of it happening in process or anything that I have seen. Another one we mentioned a ton on here, the External Revenue Service. This is a big one, right? Because that is all the international political stuff is those tariffs. Negotiating this stuff, probably asking countries to do certain things so that they don't have these tariffs. And, really the creation of the External Revenue Service as a governmental agency. This is going to be the thing that we're going to have to look out the most for, because the way that I look at it is this. Right now, all of our tax revenue is coming from the IRS and zero is coming from the ERS, right? There's been some talks that those would switch, right? Get rid of the IRS and all of it comes from the ERS. I don't think that that's going to happen. What we would have to see is, hey, if we're getting $5 million from the IRS and we get $2.5 million from tariffs and the ERS, are we then going to lower the tax revenue of, the IRS? Are we going to go cut taxes for the American citizens? Or do we actually just get it to pay down the budget deficit? So depending on how this stuff gets set up, how it's viewed in the international markets, how much there is, repercussions from us doing this to other countries as far as them taxing our exports and their imports, we'll see. There is so much going on. Keep an eye out for this stuff, and really, over the next 90 days, we should be getting some more news. What do I mean by the next 90 days? So I'm going to leave you with this last line here. Before I leave here, to wrap this up, I'm going to leave you with a line that all came from the executive order on freezing hiring in the federal government, and specifically, again, calling out the IRS. So not only has there been an overall freeze in the IRS, but the federal government, and it gets worse, like I said. Within the 90 days of this memorandum, the Director of Office of Management and Budget, OMB, in consultation with the Director of OPM and Administrator of DOGE, Department of Governmental Efficiency, shall submit a plan to reduce the size of the federal government's workforce through efficiency improvements and attrition, right? So what does that look like? I don't know, right? And I'm not sure that you know either, but what I do know is that we probably are not looking at a IRS agency with more funding. We are probably not looking at an IRS agency in the near future with more agents. Now, again, most of that is good news. Most of this stuff is positive, right? A lot of this is just bureaucracy, unneeded work on the 1099s. But the same flip side here, we also have to be mindful, right? Be patient with your accountants is what I'm saying here, because it might seem crazy that we've tried to call or we've tried to email or mail these people 10 times. That was before, right? And it's probably only going to get worse. The rest of it, we'll just have to wait and see. As always, please share with friends. If you have any questions, comments, or ideas for future episodes, shoot me an email at podcast@parmelis.com. And don't forget to check out the rest of the shows on the Aftermarket Radio Network as well. We got Craig with Speak Up, Matt diagnosing the aftermarket and everything else, Chris Cotton and his weekly Blitz, and Kim and Brian Walker with everything marketing for shop owners. So check them out. I know you guys will enjoy them. Thanks for joining me on Business by the Numbers. Stay safe out there, and I will talk to you all next week.